Good morning. It's been a couple weeks, and so I wanted to get on here and share with you what I've been doing for the money moves this month, and maybe cover a few risks that have occurred. It's definitely been an active time in the market. Not so much active for me, as you'll see, and let's get right into it. So first, in the real estate area, we'll talk on that. All the houses are rented. All the rents are being paid. There's no vacancies. People aren't moving. And most of that is because rents are going up. I raised rents last year because, the cost to me went up and might have to this year. But a lot of rents aren't at market value because market value might be, 30% increase, and I'm not going to raise rents 30%. 5 to 10 is probably the range maximum that I would raise rents. I prefer not to, but I don't have that choice right now. New interest rates on new purchases went from like 3.85% to about 5.5%, and that's with the adjustments in the base interest rate that the government made. So that creates some risk. There's two types of risk in this. One is the actual interest rate changes that have occurred, and that's occurred on anything that might be variable. And I have one variable thing, but that's not significant. And then the risk of interest rates changing and it hitting some revolving debt that you might have. And so what I'm doing to manage that risk is number one, I'm calculating how much I'll need to cover any interest increases, how that'll build into my business plan, and how that could affect me. Right now, I calculated 10% as the risk number I was looking at. So 5.5, so it allows 4.5 more percent. And then, secondly, is once I have that risk taken care of with whatever I'm going to do, then how do I handle making sure I can acquire more properties, when the market is down, since we're in a recession now. From an investment standpoint, I'm accumulating cash. I think there's going to be a spike in the market, but on top of that, I'm dollar cost averaging into Walmart stock right now, and that is the only investment move I'm currently making. I think that what will happen is that these dips and these smaller, changes in, house values or, house pressures or stock values will push people's cash into the markets, but it'll continue to go down because even with people putting more cash into markets, the net amount of cash, because the government's taking it out by the trillions, is going to be negative, so that the rate's going to sort of come down a little bit more. And so I'm not moving anything on that. From a crypto standpoint, we had a major risk occur in Celsius. The exchange, from what I look at, is it's there, but you can't take money out. You can't take crypto out. And so bad news is a risk occurred. That exchange is probably gone. That is probably what I'm planning for, as a total loss of everything on Celsius. And so due to that, I looked at the exchange risk as a higher probability. And so I transferred all my stablecoin back to the bank on Blockfi. And I'm going to look at Nexo. You remember one of the reasons I put money in Bitcoin and Ethereum was to earn money on exchanges. And basically, the risk of the money being on the exchange, and the exchange having an issue like Celsius did, is covered by the earnings. And so you're really not anymore earning anything because that risk has occurred and probably is higher. I'm looking what to do at Nexo. And then the last piece is my Solana, and we'll talk about that down below. I had planned, just to let you know, that I plan based on risks, and sometimes those risks occur. I don't make fast decisions generally, but I had planned to buy some Tether at 12% and get a bonus to put it on the Celsius platform. Now, if you've been following crypto, you know that Tether went to 0 and Celsius went to 0. So that would have been a pretty much bad move if I had done it at that point. And so I did not do it before those things occurred. And so good timing on my part. Sometimes it's good to be slow. From a learning standpoint, I'm still working with the Bobcat miners, still mining helium, doing about $1 a day on the one. One of the other ones is going to be deployed soon. I don't think it'll make that much, but it might in the future. Just not sure about that. And then the affiliate marketing account, I've had some hits and things and been trying to experiment with that. And on Solana and MSOL, I'm probably going to... Now, Solana is directly staked off of a ledger, so it doesn't have any exchange risk because it's not on the exchange. And so I'm probably going to sell my MSOL and maybe convert it back to Solana. Continue to stake my Solana on the screen behind me because it doesn't have the same risks. Now, it does have the price risks in that, but it doesn't have the exchange risk. And so, we'll see how that goes and, how big that can get and what Solana is going to do. The other ones on the Nexo, I'm still looking into it, making a decision what I'm going to do. Do I want to hold any crypto on the Ledger Nano that I can't make money on? Probably not what I want to do, but we'll see how that looks from that standpoint. And then at some point, I'm still looking at selling my Disney, Riven, and Coin. These have had major decreases, but on these things, on crypto, we talked about percentages of maximums to put into there. And, that's why we do percentages, is because there are risks that can occur. And when those risks occur, you don't want that to destroy you or take away months or years of your savings. And so that's why you build up, your investments in things that have an underlying value. You build up your side portfolios, your income streams, so that those can cover your risk. Nobody goes out and takes, 10 years of hard labor and puts it into a Nexo platform or a Celsius platform. That's foolish. That's like going to the gambling table and just, gambling your money away. And so I'm still looking at selling these, and I'm buying Walmart. I'm looking to buy VIG and also Pepsi. I have enough Home Depot. At this point, I'm probably not going to acquire any more. And so the main stocks that I'll have for a longer term, hopefully, will be Pepsi, Walmart, Home Depot, and then most of my portfolio will be in index funds from a stock standpoint, and then the rentals that we talked about, and then the other business interests that are still bringing in income, haven't been affected as much by the economy. And don't correlate with stocks and things like that. One thing I want to add is that in a recession like we're in now, your asset values will go down. That does not mean that you lost money. You may own the same percent of the business that you owned before, and now the business overall is valued less because people can get a higher rate on their dollars outside of a business. And so you have to understand those fluctuations. And so it's kind of like a rental house where, let's say you get $1,200 a month in rent, and one day Zillow says a house worth $220, the next day it's worth $230, next day $240, next day $200. It might fluctuate around, but you're really looking for the rent. And so over the long term, if you're getting that rent, then it's worth what you bought it for, and don't worry about that so much. Now, if it does go up dramatically because of real price pressure and things, you might look at selling it, or it goes down dramatically. You can find more deals, maybe buying another house if it's equivalent on the rent side. Just wanted to share that with you this morning, give you an update on what I was doing. I'm not leave you hanging. Have a great day. Subscribe and like down below. Talk to you later.